this is for all my day traders out there that are trading, and this is for anybody that's ever lost money in the stock market. If you've lost money, you can easily write it off in your taxes. So this is called a capital gain loss, and what it is you're telling the IRS, hey, I made an investment earlier this year and I lost money on this investment, so can you help a brother out and just overlook this? My income isn't what it is because my investment went bad and I lost money. So how do you do this? So there's something called IRS 8949 form, and basically what you have to do is fill it out, and on that form you basically give it the description of the investment, you tell what day you acquired that stock, and you tell them what day you sold that stock, and then you also tell them what the sale price was, and then you confirm like what the investment dollars, what the loss was versus what the gain was. But in this case, we're talking about the loss. So then after you're done with the 8949, you move on to the Schedule D form. And this Schedule D form is basically the same thing, and you tell them information about the stock, how much you lost, when you lost it. It's just information that they have on record. So basically, the reason I'm telling you this is because you're able to write off up to $3,000 a year whenever you lose money. And if you ever lose more than $3,000, you're able to carry over the additional balances onto the next year. So let's say you lost $6,000 in the stock market this year. You're able to write off $3,000 this year, and then next year, you're able to carry that additional $3,000 onto the next year. So if you have a tax preparer, let them know, hey, I have capital losses that I want to report in my tax, so they will put this into account as well. So this is just something really quick I wanted to let y'all know about. If you're investing anywhere, there's always going to be some losses, and it's always very, very good to report your losses. I mean, even if you're a long-term investor and you have a lot of stocks that you're invested in for the long term, but you also have some other stocks that you invest in for the short term, it's best to report the short-term investments and let them know, hey, I lost money in these investments, and then you move on. One quick thing I do want to say that's important here is you have to realize the loss. So realize the loss in this case means you have to sell the stock after it's lost value. So for example, if you, let's say, invested $1,000 in Facebook, but then the stock went down to $20 and you lost $980. So you never sold the stock, but you kept it and you left it at $20 and you say, oh, I lost my money. That's not a realized loss because you never sold the stock back to the market to realize your $20. Basically what you have to do is you have to sell the stock, and that's the only way you can get this tax write-off. So always keep that in mind whenever you are trying to write these taxes off. So this was just a quick, real quick video for anybody that's ever lost money. I know a lot of people have. I myself have lost a lot of money too. So this is a good way to take advantage of that and always get a little bit back. It's not going to give you everything back, but it's nice to get something than nothing. So this is just a quick one for everybody. Keep that in mind whenever you're filing your taxes. If you haven't filed taxes yet, make sure you note this down and you let your tax preparer know, or if you do it yourself, also take this into account. I'll have the forms in the link below in the description. So if you want to have access to the Schedule D form and the 8949 form I talked about, they're going to be in the description. So check them out. Let me know what you think. Anyway, it was your boy Elijah. Thanks for watching this video. I'll see you next time.